We are getting numbers coming across the ticker. Second quarter revenue looks like $8 billion, and I know you were expecting $7.3 billion. Actually, the street was expecting 7.3 as well, so better than expected on that side. The loss per share, it looks like adjusted 18 cents, and we were looking for 8 cents. Paul was looking for 8 cents. Our Bloomberg survey was looking for 8 cents, so it looks like Intel blowing away the EPS, adjusted EPS at 18 cents, and also the revenue at $8 billion. Courtney, what do you think?
Yeah, I also want to focus in on gross margins. Gross margins, a lot of analysts have been looking for this number coming across as at 51. A lot of analysts saying that a rally will happen if gross margins come in. A rally will happen at 51. Analysts were expecting in an informal survey that we did 46.3. So just going through some of the release here, microprocessor units were higher in the first quarter. Average selling prices for microprocessors down sequentially, but I do want to go over the business outlook. Now, the third quarter, they're saying revenue is expected to be $8.5 billion, plus or minus $400 million. Gross margin percentage, 53%, again, much higher than analysts were expecting. Spending, approximately $2.8 billion. Now, for the full year, spending, R&D spending, between $10.6 billion and $10.8 billion, up from the prior outlook from $10.4 billion to $10.6 billion. Matt, I'm going to continue to keep going through these results. I'm going to have more for you shortly. Sending it back to you.
All right, I'm going to go straight back to Paul Meeks. Paul, what do you say? I mean, it looks like Intel really knocking the cover off the ball, just like Goldman Sachs. Obviously a very different animal, but how positive is this?
I think it's very positive, not just the June of 09 quarter, but the forecast for the September of 09 quarter, much higher than expected, and you're seeing a very robust growth sequentially in sales and also ticking upwards in gross margin, which we talked about a few minutes ago, indications of better than expected pricing. So I think Intel, again, is a great long-term investment. I would buy it here, but if you're looking for short-term money, I do think that the stock will start to see some kind of resistance at about 17, and then maybe it goes to about 18 or 19. But remember, this stock a couple months ago was as low as 12.
Now, I want to point out the trading is halted. Here you see, well, you just saw a chart of the stock there. $16.83 where it closed today, up about 2%. You know, we saw Goldman rally yesterday, and then today they came in with a great surprise. Intel kind of rallying today, up 2% when the broader market was only up about 0.5%. Do you think we see the stock come down tomorrow? Is it a story of buy on the rumor, sell on the news?
I don't think so, because the problem with Goldman Sachs and all the pluses and minuses with any financial institution, they're notoriously very difficult to predict the results. And so I don't know if anybody is really surprised that Goldman Sachs beats the EPS by 50%, because they do better typically than the consensus. But again, with a financial, who knows where it's going to be. With a technology company, it is a bit easier to forecast. And so I do think the fact that they blew away the numbers by so much, even though the stock has risen in recent sessions, the rise will continue tomorrow.
What does this mean, Paul, for everybody else in the tech food chain? I mean, how can you gauge what the rest of tech looks like after Intel does so well and has such a great forecast for the third quarter?
I think it's a modest positive for everyone, but then you also have Dell giving a fairly bearish two fiscal years out forecast for the PC industry. And remember, these two companies are Goliaths in the PC industry. So who do you believe? Obviously, Dell is losing some market share to HP and others. Intel is gaining some market share versus AMD and others. But I think overall, this is not a great positive, but a modest positive for the technology sector.
Let me ask you if you would buy anything here, Paul, because it seems like you think there are good long-term stories out there, but right now you don't see any good value propositions. And only about 20 seconds here.
I like Cogo Group, COGO, which is a Chinese contract manufacturer. I like a company that's headquartered here in South Carolina called Force Protection, FRPT. But these are companies that have great business models, and they're down on a dip versus buying stocks that are rallying, which as a contrarian investor, I typically don't like to do.
All right. Hey, Paul, I appreciate you spending some time with us talking about Intel beating expectations. Paul Meeks there, principal at Windsor Asset Management.